But if we have a look at this other one, and if I can just get back there, over here, you can see the two Bollinger Bands are very close together, which forms a powerful resistance level. And then you start getting the series of reversal candles. First of all, this one here, which is a doji candle. Now, a doji candle is a very small body with long wicks on both sides. We follow that with another perfect doji candle. In fact, there's no body to this candle, and we've got a long upper wick and a long lower wick, and those are normally seen as reversal candles. And so those would have been the two candles. If we hadn't got in on the first candle, the second candle confirmed that we had a reversal taking place. The stochastic beautifully overbought. Now let's have a look more closely at where we would have put our stop loss. And I'm just going to get the price indicator up here. So on the first candle, the high was at 47.56, and the close of that candle was at 47.44. So that's a 12 pip distance between that close of that candle and the high. So normally I don't advocate putting a stop loss in less than 25 or 30 pips. So I would have put my stop loss in this case at well, 47.60. That would be a 26 pip stop loss. And then the next candle we had a high of 47.57. Excuse me, I've made the wrong. The high here was 47.56. So I would have put a, let's say, a 25 pip stop loss in. That would have given me 45.60, 45.80. The very next candle, the high was 47.57. So our stop loss would have held beautifully there. And you can see it took several hours of moving sideways before the price eventually began to decline. And then we suddenly get the momentum picking up down towards that reversal that I showed you earlier. So that's the second pattern. First one was the bullish engulfing. The second one is this doji candle. There's a good doji there. There's another even better one there. And you can see that it formed a top, although it took some time for it to develop. And as soon as the momentum picked up, then we had a nice move down to this reversal at the other side. So the two key issues here are the doji candles. And I'm going to give you some advice about reading in a minute, because I believe that if you can understand candles properly, you should get, well, I'll tell you now, there's a book on candlestick trading by Steve Nissen. That's Nison. And I think the book's called simply Candlestick Trading. But if you look it up on Amazon.com, look up Steve Nissen and look up Candlestick Trading, and you'll find the book there. Go and get it yourself and read it, and try and pick out the ones that I'm telling you about. So doji candles, very important, especially when they occur in high probability zones like we have here with the two Bollinger Bands close together and overbought stochastic. This one here, bullish engulfing candle, very, very important one in currency trading, particularly when using the G7 system. So let's scroll back to some more high probability areas. Here's another excellent example of a doji candle. There were some that formed originally, and we might have just been stopped out here, I'm not sure, but let's say we put our stop loss 30 pips above this doji on that reversal, and the high of that was 47, so we would have had a stop loss at 47.30, and the high of this one in fact only reached 47.09, so we would have been safe on entering that one. And even though we weren't stopped out, there's another reversal candle right there, and we would have still been in the trade. And once again, you can see how long it took to develop. We had a lot of sideways movement for 8 or 10, even longer, 8 or 10 hours and even longer, and then eventually that broke. And this is interesting because the price movement here, you can see two little dojis there, which confirmed again that we were forming another intermediate top there, and you can see another one there. But this decline here was a result of the reversal that took place, about 15 hours before that. And even though we had sideways movement for a long time, that candle there was the trigger for this momentum downwards to build up. And remember we talked about exit strategies during the last video, so we would have used one of those exit strategies here. And in fact, you can see there's another indication that we weren't going to go much lower after we formed that spike low. So what I want to talk to you about, this is also what I would call a spike high. And what I mean by that is when the price spikes right up through the reversal area, in this case the Bollinger Band, and then moves back down and forms a doji. In this case, the doji is really biased towards the upside. The upside candle is much longer than the downside candle, and this has formed a spike high through the Bollinger Band. So that's a very important reversal pattern, whether it occurs at the top of a trend or at the bottom of a trend. A doji pattern, yes, we've talked about dojis. Let's just go back, and these are classic type doji patterns. But then what we have here is another doji, but it's also what I call a spike high, and that's a very, very powerful reversal pattern. There's another one here which we talked about earlier, a spike high doji. Now let's go back some more. Let's see if we can pick out some more candle patterns. I'm just picking these out at random, and I'm looking for where they occur against one of our reversal areas. Okay, here we go again. Here's a spike low. You can see we've moved down through the Bollinger Band. That's the 100. We're also below the 200 Bollinger Band, and we've got an oversold stochastic, and we get the spike low. Now the formation of the spike low is very clear because we've got a very small candle body. That's one of the first things you need in a spike low. And then we've got this very long wick which forms the spike down, and we've got almost no upper wick. So that's a very classic spike low. If you had to switch across to a 5-minute chart, you'll see that the spike low really on a 5-minute chart looks something like this. You get a strong movement down, just tracing it out with the cursor. You get a 5-minute chart moving down strongly, probably a little reversal spike low at the bottom of the 5-minute chart, and then a move up and back into this plane. So move down on the 5-minute chart all the way down here, then back up again, a little bit sideways, and then we start moving higher. So a very good example of a spike low over there. Now what I want to pick out for you is a piercing pattern and a dark cloud cover, and I'm going to see if we can find one of those. And here's a good example actually, a pretty good example, and I see just across to the left there's, well, this is a good example, but you can see we're nowhere near the Bollinger Band, so I'm going to skip that one. And what we have here is an excellent example of a spike high, once again, through the two Bollinger Bands. The stochastic not quite overbought, but a very, very beautiful spike high. And remember, if it goes through both Bollinger Bands, which are pretty close together, like they are in this case, it forms an even more convincing reversal.